And we do have Kathy Matsui joining us. She's one of the top 10 women to watch out for here in Asia, according to the Wall Street Journal. She's the chief Japan strategist at Goldman Sachs, and she joins us from our Tokyo studio. How are you today, Kathy? Hope you're doing well.
I'm very well. Thank you for inviting me.
You're welcome. Let's get into what your clients are saying about this DPJ victory. I mean, you spent all Monday talking to them about the election results. What questions are they asking most, and what answers do you have to give them?
Well, it's interesting because leading up to the elections, we had quite a number of curious investors around the world asking whether this apparent landslide election by the opposition would be a deja vu of 2005 when the Koizumi cabinet called snap elections, leading to also at that time a landslide victory at that point for the LDP, i.e. on a campaign of structural reform and deregulation. It looks very similar on its surface, but I think in reality people are beginning to take a closer look at some of the policies that the DPJ is proposing. And although they are being very aggressive in terms of fiscal stimulus, really quite specifically directed at the weakest part of the Japanese economy, which is the household sector, I think investors who are obviously looking at corporates listed in Japan are wondering where's the long-term growth strategy? What is in the DPJ's manifesto that's going to help the corporate sector? And on that respect, I think there's a lot of question marks still outstanding with respect to what is this new government going to do for deregulation, structural reform, and boosting Japan's long-term growth potential.
Okay, well, if we're going to bring up a historical context, after that Koizumi snap election in 2005, we saw the market gaining about 50 to 60% afterwards. They're probably asking you, are we going to see this kind of deja vu?
Mm-hmm. And I think, again, the big differences are several. Number one, keep in mind that heading up to that election back in 2005, very few people had predicted that Koizumi, on the banner of postal privatization, would be able to secure such a huge victory at the time. Number one, this time it wasn't really any surprise factor at all. Number two, keep in mind at the time that the rest of the world was really going gangbusters. It was a very favorable environment for Japanese companies, for the Japanese economy. This time around, it's not so evident that everything is firing on all cylinders. So I think there's a lot of differences. And again, I think investors that I speak to that know Japan very well are really trying to dig through the details. What is the reform that the DPJ stands for? They are, in fact, talking about stopping postal privatization, which is quite worrisome for some of the people in the business community here.
Yeah, Kathy, in a client note back in July, you said that investors will be disappointed by the DPJ's victory, as they'll probably do nothing to address, the problems in Japan, which is an aging population, and also the waning financial status. Do you stand by those words?
Well, I think the market sort of speaks for itself. In the last couple of days, the reaction has been, pretty muted, as you've seen. Obviously, the correction in the Chinese stock market overnight had not helped the environment here, but I think the verdict is still out as to, beyond the short-term handing out cash to households, what is the DPJ really going to deliver in terms of putting its putting politicians in control of policymaking, taking that away from the bureaucrats. I think that's actually a great thing to work toward, but how are we going to see that in action? And they're also talking about some worrisome things for the corporate sector, like banning temporary workers in the manufacturing sector, for instance. A lot of these measures actually sound very socialist in nature, which I think for a lot of the big companies here is not that comforting. So we shall see.
Okay, well, Kathy, let me just ask you this. Goldman Sachs also recently released a forecast of the topics to hit about 1,000 by year end. With the DPJ in power, and it sounds like you're a little skeptical as to what changes they can actually enact. I guess you're not changing your forecast at all, are you?
No, and since we'd assumed that the DPJ would come in, they'd be coming in on a platform of really aggressive fiscal stimulus. But the flip side of that coin, of course, is that Japan's fiscal situation, which is already quite bad, will get that much worse. And again, going back to the question, where's the long-term growth that's going to raise the tax revenues to address that big hole of the fiscal balance is still out in question. That doesn't really change, our long-term view on the market. At the end of the day, I think that the market right now, it has had a very good run. There's nervousness about Chinese policy. I think it's probably going to tread water here for a little while. And then as we enter interim results season, October, November, I suspect that there actually will be a string of upward revisions from Japanese companies who are very, very conservative about their outlook. Because we're looking for a more benign global environment for Japanese companies in the second half of this year, I do suspect you'll see the market again resuming an uptrend in the fourth quarter. But I think for now, the political uncertainty, the external uncertainty, especially vis-a-vis China, probably means the market is going to take a bit of a breather.
Yeah, Kathy, we have about a minute before we get to commercial break here, but I talked to an investor earlier this morning who says this victory by the DPJ could bring back in foreign dollars, which has all but disappeared in the Japanese markets.
Operative word is could. It indeed could, as long as the DPJ, again, starts to address what I mentioned earlier, and that is deregulation, long-term growth strategies. It talks about the environment. Well, let's focus on the environment as a national policy, and let's try to promote those industries. But we also really need to attack the what I call holy grail of deregulation, healthcare, distribution. There are lots of industries, I think, that could actually you could drive a lot of growth potential, but they're really mired in regulation, which is preventing that growth from being maximized.
Okay, Kathy, we're going to go pay some bills right now with some commercial break. We'll be back in 2. Stick around for more market picks from Goldman Sachs' Kathy Matsui and also So let's get back to our discussion with one of the top-ranked strategists in Japan. We have Goldman Sachs' Kathy Matsui rejoining us from the Tokyo studios. And the Wall Street Journal has called Kathy one of the top 10 women to watch out for in the Asia-Pacific. How do you like that title, Kathy?
Don't quite know what criteria they use to judge that on, but
I don't know how much they're watching either. But we'll get into that a little later on. Let's talk about earnings, Kathy. Remember what you said earlier on that you're expecting non-financial earnings profits to surge about 73% in the next earnings period in Japan. That sounds a little optimistic for some, considering we do have still a weak economic environment around the globe, and also that yen a little unpredictable.
Absolutely. And indeed, the consensus, as well as companies, are guiding for a much more conservative estimate. Keep in mind that 73% recovery is for fiscal 2010, which ends March 2011. So it's next fiscal year that I'm talking about the recovery. But also keep in mind that the global recession, the financial crisis, hit Japanese company earnings probably harder than any other developed market. So from peak to trough, Japanese listed earnings are down almost 100%. So we're talking about the law of small numbers here. So the big percentage change numbers may sound very aggressive, but in fact, we're coming off an extremely tiny base. And I think the combination of our expectation, at least my colleagues around the world do expect that the rest of the world is not going to enter a double dip, that there will be some growth momentum picking up in the second half of this calendar year and going into 2010. The enormous amounts of stimulus that has been provided by central banks and governments around the world, along with some recovery of G3 demand domestically, and of course that continued tailwind coming from the emerging markets, we think will allow Japanese earnings, which again are still very externally dependent, to recover at least 70% next fiscal year. So I don't think that's actually that wild a presumption.
Yeah, so with non-financial earnings soaring about 73% next year, that only translates, I guess in your books, in your estimates, to 10% gains for the topics next year?
At least 10%, in my opinion. Keep in mind that the valuation picture, I think, for Japan, again, stacked up against the rest of the world's markets, looks okay to us, but not extremely attractive. So you're looking at a PE multiple on next year's earnings at about 19 times, which is, of course, a stretch relative to what you see in the rest of the world. Price to book is still about 1.3, 1.4 times. But again, the returns people always point to are quite low in Japan relative to other markets, especially in the rest of Asia. EBITDA multiples, though, look still more attractive for Japan. So net, if you look at the overall valuation picture for Japan, I think there's some upside potential there. But I think most of the gains in the market will be driven by earnings as opposed to any kind of valuation or multiple expansion. That's why the upside, I think, is going to be limited.
I see. Okay, so in this note where you think that these profits will drive about 73%, you call this note the black is back. And some of your stock picks, I guess, in relation to that theory are some of the, some of the bigger, more traditional companies in Japan, such as Toyota, Nidec, and Kawasaki Kisan, who tend to be quite conservative when it comes to forecasts for their earnings.
And in fact, on the basis of our analysis, post the first quarter or April-June quarter results that were announced a few weeks ago, 88% of TSE1 firms actually, despite the fantastic recovery that you saw in that first quarter, decided not to upgrade their full-year guidance. So that's why I think coming into the interim season, you probably will see a whole slew of companies, especially those that are geared to the external economy, see their forecast upgraded. And again, keep in mind also it's not just the top-line growth that's supporting that earnings recovery. It's also the fact that many of these exporter companies have done a very aggressive job at cutting costs in the last 6 to 9 months.
Okay, Kathy, stay where you are. We're going to head to commercial break right now. But afterwards, let's talk about the China impact and your theory of investing in Chindonesia. We'll get more with Goldman Sachs' Japan strategist Kathy Matsui will rejoin us from their Tokyo studios. And also, we'll get CLSA's view as well on how the DPJ's victory will translate into the stock markets of. Well, let's get back to our discussion with one of the top-ranked Japan strategists out there. We have Kathy Matsui, who is Goldman Sachs' chief Japan strategist, and she rejoins us from Tokyo. So, Kathy, I hate to ask your views on someone else's strategy, but it is contrarian to what you have. When you hear Chris Wood saying stay away from Toyota because of global growth, you're saying buy Toyota because it has these conservative forecasts. What do you think of what CLSA has to say?
Well, I don't necessarily disagree with Chris's view on the short-term implications of the DPJ's policies. As I said earlier, that the amount of spending that they're planning intended for boosting the income levels of the household sector here are quite enormous. So presumably there is going to be some benefits there. But again, I think the verdict is still out as to whether the measures that they are putting forth are going to have longer-lasting, sustainable benefits for domestic demand or not. There is a risk, for example, that if people are worried about their jobs, look at the unemployment rate hitting a high level in July, 5.7% here, that the money that the household sector gets from the government, more of that will be saved rather than spent. So I think we have to be a little bit careful about the long-term view there. But on Toyota and the automakers themselves, our view is more longer-term and linked to the fact that we think there's much more growth potential probably lying outside of Japan, especially in neighboring Asia. We think that some of these automakers in Japan are also very well positioned to benefit from ongoing demand for hybrid vehicles, where a company like Toyota has the lion's share globally in that space. So I think there's a difference in time horizon, but we think longer term there's probably still much more growth potential to be had outside Japan rather than in.
Well, Kathy, you talked about risk. Let me just ask you, with the sell-off that you're seeing in mainland China, down 7%, there's a lot of investor jitters out there. But let's say the stock markets do sell off in mainland China and maybe here in Hong Kong. What does that mean for Japan?
Well, I think that it's very tempting to look at the charts and just say, well, you know, the bubble is bursting and that's the end of the story. Our collective view at Goldman Sachs on the whole China picture right now is that the growth rates that you're seeing, whether it be credit growth, money supply, and various parts of the economy, they have been growing at a very, very robust pace. And it's very difficult, of course, to try to maneuver and engineer and control that growth. But if they don't start to control some of that growth, then it could be a bigger problem somewhere down the road. So we're actually taking more of a cup is half full interpretation of what's going on in China. Most of my colleagues who discuss these issues with policymakers in Beijing very frequently tell us that the authorities are very concerned, of course, about what's going on, but they do not want to sacrifice growth because at the end of the day, they're still worried about the global picture. They don't think that China alone can offset fully the weakness that's still being seen in places like the United States. So our view is that some of this sort of cooling down or, let's say, speed adjustment we say in Japanese is actually not a bad thing, but probably longer term something that's necessary to sustain the growth story for the Chinese economy.
Okay, Kathy, we're running out of time here, 40 seconds, but let's get a take-home message here. As a retail investor, how do you play the Japanese markets? What's your advice?
Well, I think that aside from the near term on the elections, I think if you're looking for a longer-term investment story, again, focusing on Japanese companies that are geared into places like the high-growth markets of China, India, Indonesia, Chindonesian, mainly because of the big domestic demand, secular growth story we see there. There's some obvious plays, like my analysts are suggesting, names like Komatsu on the infrastructure spend side, but there's some less so obvious dark horse plays like Unicharm, a Japanese consumer products company that is basically selling disposable diapers.
It's been such a pleasure talking to you. Thank you so much. Kathy Matsui of Goldman Sachs.